Hi everybody, this is Lara at Elliott Wave Gold with your weekly analysis for oil for the trading week ending Friday 25th of October. Upward movement continued this week as expected, and it looks like a big triangle is unfolding. I've got two ways of looking at this triangle. For my bearish wave count, I'm expecting a downward breakout when it's finished, and for the bullish, now an upward breakout when it's finished. Elliott Wave analysis first, classic analysis last. Monthly charts first, and they're on a semi-log scale. This monthly chart is my main preferred bearish Elliott Wave count for oil. It expects that the bear market for oil was not over there and that it's going to continue. One of the reasons why I expect this is my main, or why I have judged this to be my main wave count, is this upward movement here subdivides best as a 3, and this upward movement here also quite strongly subdivides best as a 3. And so that would support the view that oil is still in a downward movement because three-wave movements are counter-trend movements. This Elliott wave structure is a double zigzag for a big second wave, possibly at supercycle degree. Double zigzags, particularly for second waves, are reasonably common corrective structures. Here's the first zigzag in the double, it's labelled cycle W. The double is joined by a 3 in the opposite direction, which is complete and labelled X, and the second zigzag in the double has a purpose to deepen the correction when the first has not moved price deep enough, and it should give the whole structure a clear counter-trend slope, and because this is a correction, the counter-trend direction is downward. To achieve that purpose, cycle wave Y would be expected to end reasonably below the end of cycle wave W at this price point. Cycle Y should subdivide as a zigzag A, B, C. Let's take a closer look now at the structure of this possible triangle for primary B, where this high here, before that we'll have a look at this on the weekly chart, Here's cycle wave X as a three-wave structure. You can compare and contrast this with my bullish wave count, which views it as a 5. When we see it as a 3, I see it A, B, C, with C subdividing 1, 2, 3, 4, 5. And here's the start of cycle Y. Okay, let's take a look now at this piece of movement here. We're going to look more closely at this possible triangle for primary B from this high here, the end of A. Here's B, C, D, and the final zigzag for E should now be continuing. It needs to subdivide 5, 3, 5. And so along the way up, there'll be a counter-trend downward pullback or a sideways consolidation for minor wave B, but not yet, I expect, because the 5-wave structure for minor wave A needs to continue higher to be complete. There'll be little corrections along the way for fourth waves. When price trends, it doesn't move in a straight line. There are counter-trend movements along the way. And for this short-term trend upward, I expect minor wave A is incomplete. Intermediate wave E of this triangle may not move beyond the end of C. A new high by any amount at any time frame would invalidate this wave count and then would use an alternate. Within the zigzag of wave E, minor wave B may not move beyond the start of A. A new low by any amount at any time frame would invalidate the triangle at this stage. This is another way of seeing primary wave B. I'm still seeing this upward movement here as a zigzag, but now I'm looking at the possibility that primary wave B, instead of a triangle, is a double combination. Zigzag, X, flat correction. Flat correction subdivide 3, 3, 5. And now I'm considering the possibility that minor B within the flat correction for intermediate wave Y is incomplete, itself subdividing as a double combination. Zigzag, X, flat correction, subdividing 3, 3, 5. Within this flat, minuet wave B needs to retrace a minimum 90% the length of minuet A to reach that minimum requirement for a flat, and it needs to do so as a three-wave structure. I'm labelling it as a single zigzag, but it could be a multiple zigzag. It could in fact be any corrective structure. When it's complete, when it's met the minimum requirement, this wave count expects a trend change and a big downward swing within this huge consolidation. Minuet C should end below the end of A to avoid a truncation. Too many times over the years, I'm just going to go back to the previous chart. This chart expects a big triangle is unfolding for primary B, and it has a really good fit and a really good look at this stage, but too many times over the years I've expected an Elliott wave triangle is unfolding only for the structure to turn out to be invalid, and it turns out to be something else, and the something else is almost always a combination. For both of these wave counts, I'm seeing this upward wave ending here is a zigzag, and then after that this triangle structure differs from this combination structure, and so if my triangle is invalidated, then I'd be considering a combination for primary wave B. It's essential, if you think an Elliott wave triangle is unfolding, to always consider some type of combination alongside your Elliott wave triangle count. That's a really important point that I've learned the hard way. At the monthly chart level, this is my bullish alternate wave count. What if the bear market for oil was over down here, and it does look like a pretty obvious three-wave structure? That could be it for super cycle 2. If the bear market's over here and a bull market has begun, then this movement must be seen as a 5-wave structure, and this movement should also be seen as a 5-wave structure. They will both subdivide as 5s, and this one's not quite so problematic. I think it does fit best as a 3, but this one is quite problematic, particularly at the daily chart level. The middle of the third wave in there just doesn't fit. If oil is still in a bull market, is in a new bull market, then a third wave at 2 degrees may have begun here. The target for cycle 3 is for it to reach a common Fibonacci ratio to cycle 1 of 1.618. Within cycle 3, no second wave correction may move beyond the start of its first wave below the invalidation point. These invalidation points are absolute. A new price point by any amount, any time, even a fraction of a cent on a tick chart, is enough to invalidate this wave count. At the weekly chart level, here's cycle wave 1. Now you can see if this is a 5-wave structure, it could be 1, 2, 1, 2. 3, 4, 3, 4, 5. The difference is in the middle of the third wave, and this doesn't subdivide quite as well, although it does have a reasonable fit. This is the only part of this bullish wave count which does have a better look at the weekly chart level. This downward movement does look best as a 3, but it will subdivide as a 3 or a 5. I'm labelling cycle 2 over here because it looks like a 3 at the weekly chart level, and at this low it's really close to the 0.618 Fibonacci ratio of cycle 1. If cycle 2 is over there, then cycle 3 should have begun. Intermediate wave 1 may be over here. Intermediate 2 cannot subdivide with its sole corrective structure as a triangle, but a triangle could be part of a combination. Zigzag X, triangle for intermediate wave Y. Let's take a look at this at the daily chart level, where primary 1 is this high here, and this may be where primary 2 has begun. As a double combination, the first structure in the double is zigzag, labelled intermediate W, the double joined by a 3 in the opposite direction labelled X, and the second structure in the zigzag possibly a running contracting or running barrier triangle. A, B, C, D to complete, and then E. If this is a running contracting triangle, and contracting triangles are the most common type, then the BD trend line should have a slope, and D may not move beyond the end of B. If this is a barrier triangle though, D can end about the same level as B, as long as the BD trend line looks essentially flat to the eye, and what that means in practice is D can move slightly beyond the end of B. That's the only Elliott wave rule which is not absolute, and so a slight new high above this invalidation point could see this alternate remain valid with the way I've labelled it here at the daily chart level. For both the contracting and barrier triangle type, E may not move beyond the end of C. That invalidation point is absolute. I don't have anything to add at the end of this week for the monthly chart because October is not complete. The month for September has a bearish long upper wick. August had a bullish long lower wick, prices moving essentially sideways. The month for September had upward movement with a slight decline in volume, although the candlestick closed red, so that's rather contradictory. And there was a weak bearish signal from on-balance volume. At the weekly chart level, this week looks bullish, so I will be expecting more upward movement next week, and that's what all three of my Elliott Wave counts have concluded as well. There's a little bit of a longer, lower wick on this weekly candlestick for upward movement. It has support from volume, actively pushing price higher, and price has closed near the highs for the week. That's all taken together reasonably bullish. So I'm reasonably confident in expecting some more upward movement next week. On-balance volume is constrained though, and resistance is quite close by, and so that upward movement could be limited by on-balance volume if it reaches resistance. So we might only see a little bit more upward movement for one more week before on-balance volume reaches resistance here. This is reasonably technically significant because this trend line has 6 prior tests, is reasonably long held, and has a very shallow slope. Those are the 3 attributes which tell you how technically significant or not trend lines are. This one has reasonable, or quite strong actually, technical significance, and so I will expect it to halt a rise in price, but if it is broken, if on-balance volume moves above this trend line, that would be a strong bullish signal. RSI is neutral. There is plenty of room for price to rise or fall, and price is constrained within resistance and support. Stochastics is in neutral territory as well. The shorter term picture tells me to expect or look out for the possibility of a little pullback within this upward swing coming earlier rather than later next week, because volume is declining as price is rising. Although the last 2 daily candlesticks do have long lower wicks, so that's a bit bullish. ADX is declining. It's below 15. It's telling us there's no clear trend and prices range bound. ATR is declining as price moves sideways. It's quite normal. On-balance volume breaks above weak resistance. This trend line is not long held and it only has 2 prior tests, although it is close to horizontal, so there is a little bit of technical significance here. RSI is neutral and stochastics is in overbought territory. But price isn't quite fully up to resistance, which is finally up here around about 61.6. We may see a little pullback before this upward swing continues. That's all from me this week with your oil analysis. I hope all of our members are having an awesome weekend.